Okay. The idea here was that, I was looking for this bounce since Friday. The idea was there because of this one, right? Because of this chart, the idea was there for a bounce, and as expected, it bounced. The idea for Friday was this: 5 and 8, right? That was a simple idea for Friday. Now, the after the 8, the expectation was for it to still go back to the mean and test the mean, right? That was the idea there for Apple. And if Apple is doing this, if Apple is doing this, then you can easily expect the ES and SPX to move higher. So nothing big there. It's just simple um, math, taking the biggest components of SPX and seeing where it moves, and then charting SPX or ES according to the 1 hour time frame, and figuring out where it's going to go next, right? Here, then here, right? So now the trade on ES is not here. Actually, the trade on ES was here. The first bounce, we were expecting it to hit this number, 4,000. The moment this cleared the 50 moving average, then the idea was generated for it to go hit this number, 4017. However, if you're looking at this chart, this line was the one that was holding it back pretty much 39.92. Once this cleared, then you were hitting the 50 moving average on the day. Then once that cleared, very, very, very easy shot to 4012, right? That was the idea here. Now, very likely if Apple clears, uh, where's the hourly chart? If Apple clears this number right here, the 50 moving average, I think it'll hit that and take a breather here though. But if it clears here, then you can expect it to move all the way up here to 148.78, 148.80 area. That's the, if that happens, then very likely you will see ES clear this number and move up all the way here to 4026, right? However, right here, ES will experience a decent resistance, the 5 on the day. By the way, the ES is hitting the 5 on the day on Haikanashi, which is more reliable in these kind of situations, I think, because it's an average. However, I would not write off this bounce just yet. Let's see why is that. EXY. Simple. Expecting it to come back into its 5 unless, if it doesn't do that in a straight line, because this is getting oversold, right? So we might see a bounce, and the bounce could very well last into 104.90 area. You know the drill. First major moving average, second major moving average, 5 and the 8, right? That's the path to the upside. Right now the 8 is sitting about 105 area, give or take. If DXY bounces and takes this path, although I think right here the 50 moving average on the hour should act as decent resistance for DXY, and DXY move lower because of the data point, durable goods, right? Now the expectation from DXY is continue to move lower and go test this number right here, right? 104.65. I rounded it up at 104.70 because if it bounces there based on 1 hour, this 5 will move a little bit higher. So probably 104.70 is a good range. So not much from where it is currently, but it is way too much from where it was at the peak, 105.35, right? So it is coming back down, expecting it to hit the 5 first bounce. If the 5 breaches, then the 8. Rather, before 8, it will test this one standard at about 104.50. If that breaches, very likely it's going to come back down into 104.40. That's where I'm getting my 104.40 from. Cool. And if DXY takes this path to the downside, then very likely you will see SPX continue to move to the upside, and very likely you will see XPS hitting this number, rather ES. We don't have SPX chart right now, but for at least the first 15, rather half an hour to 1 hour, we'll be watching, or at least I'll be watching ES charts, and then I'll switch into SPX charts, right? But this is the idea to the upside, 4027 area, give or take roughly. To the downside, this is still the idea. 3970 area on ES is still the idea for it to get tested to the downside. If that breaches the Haikanashi, this mean reversion should be, I think, a good one rather than this mean reversion. Very likely it will hit this and bounce about 3970. But I think right here on the Haikanashi mean reversion, this would make much more sense which is sitting about 39.59, 39.60 as of now. But let's reassess if it actually comes back down and breaches this 39.70 area, which is about a good 40 points from where it is. So 40 points in the sense it is about 1% from where it is right now. And by the way, we got our 1% move on ES when it was hitting 40.15. So that's good. That's good. 1% is done anyways. And you take off your risk there. And if it comes down back into 1% from where it is right now, then you take off another, another risk spot from there. Right. So DXY is the name of the game again today. And let's get into um, so, and after, let's say it breaches here and goes into one standard deviation and comes back into the 8, obviously the market will kind of move higher or at least stay neutral. If it doesn't move higher, it might stay neutral. Uh, then, if that clears, very likely you will expect next round to push into this number, 104.26 and probably 104.15 area to the downside. And to the upside, this will remain as a decent resistance, 104, 105.50 area, right? The 50 MA on the week. So if unless the DXY clears this 50 MA on the week, I'm fine with it. And once it clears there, then very likely we'll reassess the upside. And if it hits the mean at about 105.50, 105.60, then very likely it is likely to move into 106.70. That will happen whenever that will happen. Not the idea for today, but that is just the thesis. Right now, to the upside, we are looking at 104.50 area. To the downside, we are looking at 104.23 area. If it reaches the 5, then the 1 standard, then the 8, right? And the mean reversion is sitting all the way here at 104.49, 104.50 area. That's the mean, 103.50 area. That's the mean on the day. Not thinking as of now the mean reversion would happen so quick, but we will reassess if it breaches the 8 actually. 104.40 area. If it reaches there, then we'll start to reassess. You know the drill, right? The next moving average, the next moving average, the next move, right? So that's how if the technicals start to point in the in the downward direction, then we'll pick the spots based on our method. Right. Now let's get into this guy, the 10-year. So basically, the 2-year, 10-year doing the same thing, bouncing up, coming back down. Right now, it's hitting the 5 and bouncing. No surprises there. And if the 5 breaches, then expect it to come back into the 1 standard, about 3.89. That breaches very likely 3.88, right? The 8. And if it happens like this, then very likely it's gonna pull down DXY with it, and we'll experience some more upside in ES. Cool thing. Right. So let's go here. And right here on the SPX or whatever chart that you're trading, that is just a these charts are just to pick a number, right, to place your trade. But the actual trades happen here. The DXY, the US 10, or the yields, or US 2, whatever you watch for the inflation and the Fed, this is where the trade is happening, not there, right? And let's go here into this chart. As expected, this is acting as a decent resistance, the second standard deviation on the week. That's just how things work in normal circumstance. And it is hitting that. It's trying to take a breather. If the breather extends itself, very likely you can expect it to come back into 3.83. And then the 5 is sitting right now. The 5 is at 3.82. This may change, during the week. Not may, it will change during the week, right? If it starts to come back down, then the data will adjust itself and we'll go by the data. As of now, I think if it starts to come back down, there is no resistance here. On the lower time frames, there is resistance, but on the higher time frames, there's no support. It will come down all the way till here, 3.83. And to the upside, we are still expecting it to hit this 3.97, 3.98. And if it clears there, we are expecting 4. There's actually nothing at the 4 level, but let's go here just to make sure there's nothing at 4. I know there's nothing, but just to make sure. Right, there's nothing at the 4 level. Four is just a psychological level, I think. If it does, clear that 3.98, I think it will hit 4, and probably it will start to take a breather there. But I am still expecting US 10 to keep moving higher, north of 4. I don't know. I don't remember when is FOMC. Does anybody have any idea when is FOMC? March 1st, 2nd? I don't know. So probably that time you can expect another, move to the upside from 10 year. If it doesn't move to the upside, then we need to change our approach and start to think about probable, push to the downside in the market as a whole. Um, not immediate, but the idea here is that this chart is expecting some sort of push to the downside, or rather rate cuts from the Fed. That's what this chart is trying to price in. When is the Fed going to cut interest rates? And I don't see it cutting interest rates as of now. I'm still seeing at least another 75 basis points to the upside by the first of first half, within the first half. So I'm thinking 25 March, then 25 May, then 25 June. April doesn't have FOMC, by the way. So March, May, and June, I'm thinking 25, 25, 25. So cumulatively 75. Right now we are sitting about 4.75, and add 75 on top of that, you will hit up to 5.5. And I think 5.5 market will be able to digest given the conditions, the the full employment picture going on right now. And the second thing that is happening right now is the China reopening is going smooth, and I don't know if anybody follows China news closely. Their parliament is doing something. They're trying to invest, basically. They're trying to invest in growth. That's what they're doing. What does that mean? Liquidity, right? They're trying to, boost growth for their local economy. And China is, I think China, I don't really know the percentage of, how much is it responsible for the trade. Uh, I think it's pretty decent, pretty decent chunk of global trade. So if China reopens and if China starts to push liquidity into their markets, then very likely the liquidity will remain in the system. What does that mean? That means the Fed will not back down of increasing rates, right? So to the scenario here is that the stocks will not go down as long as you have full employment and liquidity in the system. The stocks will not go up as long as the interest rates are high. That's the idea there. So that's why we are looking at a range-bound market, right? So to the upside, we are looking at 5.5 on the Fed funds rate. To the downside, we haven't decided yet. Probably we are looking at 5.5 on the downside as well for the foreseeable future. That's probably first half. Then probably the Fed will take a breather for probably the second half. So that's what I'm seeing right now. Unless that picture changes, probably to the downside, you're looking at, let's say, Fed funds rate hits 5.5, right? And the 10-year will be somewhere close to 4.5 or something like that. Then you can expect the stock market to be somewhere between that 35 to probably, I don't know, 30, 34 to 35 area, right? So that's the idea. And as soon as if you see this US 10-year climb above that 3 point, rather 4 to 4.12 area, you will see again the SPX come back into that 3.5, 3950 or closer to 3900. That's the math there. Cool. Right, and let's get a bit into Apple. Apple to the downside, you're still expecting it to hit the 8 on the downside on the week. That's a good bounce spot, and then we know this, right? And anytime the price coming from the up to down, it will hit any major moving average like 5 or 8. We look for a bounce. If that breaches, we are looking for a 21 on the week, and then if that breaches, the mean reversion would happen at about 143.30 area. If if Apple takes this path to the downside, obviously we'll have further downside in SPX. Probably, I don't think it's a story for today. 143 is a not. I don't think it's a story for today. 143 Apple, probably hit of 8 again, and then that breaches, then probably into 145.30. And let's reassess the situation about after if it breaches. If it does come back and breach this 145, let's reassess the situation. And to the upside, let's go here. And mind you, this thing is still crossed, right? This thing is still crossed. So yeah, these kind of bounces, right? Trigger RSI is giving a bounce, and that's just how it works. It comes back down, hits the bottom, and bounces. And that was a fake, not a fake, but what do you call this? Ephemeral bounce. Why? Because we still have this thing to the downside. The average RSI is still pointing to the downside, and MACD is still crossed to the downside. Unless these two conditions change, these bounces are expected to be ephemeral. And the reason I did not take, as a trade, I did not take longer dated puts or held on to those longer dated puts. Rather, I traded SPXS to the downside or and SPXQ, right? So that was the idea there, that these bounces will screw the premium over. But if you are holding an ETF, which is short the markets, then that will very likely be profitable. Unlike the that will not lose its value, unlike your options. Cool. Right. So to the upside, we are expecting this cleared here, right? The 200 moving average now is cleared to the upside. Very likely, I'm expecting a hit of this number, 148.50 to the upside. If that clears the 5, wherever the 5 will open on the day, very likely the 5 will open up a little bit higher. That breaches the 8, right? And if it clears the 8 to the upside, which is about 149.80 as of now, unless that happens, then we are, if that happens, then we are looking for a mean reversion. Mean reversion, it happened twice after a bounce here at the 200 moving average, again at the 200 moving average. If it bounces here, very likely it's going to hit the mean, and we'll start to reassess further upside on that. And we'll look forward for this thing for a confirmation. If it actually starts to cross to the upside, then we'll negate the push to the downside in the overall markets as well, and we'll look for further upside. As of now, that's not the plan, but unless it clears the mean, we'll start to reassess the upside. Cool. And just because these lines are coming down and hitting this and starting to make those trigger bounces, doesn't mean that it's going to be a sustained trend, right? Probably until this line crosses to the upside, it will not be a sustained trend to the upside. Let's go here on the 1 hour chart. Very likely I was expecting it to hit this number and start to take a breather. Did not happen. However, the 5 is detached here. So to the downside, we are expecting 147.50 area. That breaches basically the 21 and the 5. That breaches the 8. That breaches right about here. That's the baseline on the half trend. 147, we are looking for a bounce there again. And to the upside, we are looking for this 50 moving average to get tested. If that clears, then very likely we're going to expect it to hit this number, 148.70. And if it clears this number here, the 50 moving average on the hour, then we start to reassess further here up to this resistance point, 148.70. That clears very likely 149.70. Right? That's how. So even if it goes up to, let's say, all the way up to here, the second standard deviation on the hour, that is still about only 2 points from where it is right now. So that's generally how Apple's ATR is. And if you have TOS, you can easily find what is the ATR for Apple, and based on the ATR, you can expect how much Apple can move on that, right? And if it breaches this number here, 147 area, then expect it to come back down here into 146.11. And if Apple takes this path to the downside, then obviously you have SPX pushing to the downside. Let's go here on the, there you go. This was the trade, right? The, if you're looking at this chart, or rather SPX or whatever chart you're looking at and trading here, it's not going to work out. These charts are just for you to pick a number or a strike where you can place your bet. That's what these charts are for. The actual trades are happening here. If DX5 bounces, you'll have ES come down. Sometimes may not be a one-to-one correlation, but by and large, this is how it works. If it bounces up to here and clears this number, then we further reassess it into this number, 104.93. If that breaches, then we reassess into 104.97. And if DXY takes this path to the upside, very likely we'll have continued downward pressure on SPX, if it rather ES. If it breaches here, very likely it's going to come back down into this these dots at about 4002. Cool thing. Now let's get into some Microsoft. By the way, let's look at Meta today. So Meta, very likely, it's going to bounce here. I think it's going to come back down into this number, very likely 166. Then we look for a bounce. That breaches very likely is going to push all the way into 160, especially if Apple starts to push down. This thing will, if it breaches the 5, then very likely it's going to go hit the 8. And that's on the based on overbought conditions here. Very likely we go here for Meta. We'll confirm if that's the case. Yeah, 5, 8. By the way, this is how just how it works, right? Technicals are technicals. Overbought conditions, breaking the third standard deviation. This is a clear short. Third standard deviation, breach of third standard deviation, very likely will start to pull it to the downside. Right now, here it is sitting at the 21. Mean has breached. I should have taken this trade here for a mean reversion. Now the mean has breached. Very likely it will try to bounce here and come back up into 5 and 8. And if the mean breaches again, it's going to go up all the way till here at 177. If Apple starts to push to the downside, and if this thing breaches 21, 168, 167.50, very likely is going to come back into this number 162.90. This is one of the trades I'll be watching. We look for another bounce here at 162.90, 163. That will very likely breach if Apple starts to push to the downside, and then after that we look for another bounce here 159. As of now, not really plotting anything sub this number actually 163. But if it does breach and Apple start to push to the downside for some reason, I don't know what's the reason going to be just yet. But if it comes back down into 163, breaches that, then we'll reassess into 159 area for Meta. Right. Let's go here. What is Meta doing? Right. If I were to be in an immediate trade, very likely I'll be watching this number here. If it clears to the upside, and then this is where it's going to go hit 172.50. To the downside, about 170, 120. Right. If it breaches here, 5 breaches, then the 8, 8 reaches the 21, then the mean. Mean is sitting as of now. Mean is about 172. Sorry, 170.60 area. Let's see if that comes down to that number. And if that breaches, very likely we're going to hit this 170. Then very likely it's going to come back down into 169. That's how it's going to work. Uh, and if it clears this number here to the upside, and again, it's a big if. If Apple starts to move to the upside, then very likely 173. Then again, I'll try to short it here at 174 area. Cool. Let's get into some Microsoft. Should have shorted Netflix. 317. I was looking at this from 355 to short it. Anyways, there will always be a next trade. FOMC March 15, 16. No, thank you for that. Right. So Microsoft, it bounced. Right. It bounced here. Let it do its thing, and very likely it's going to go hit the 5, 250, 270, 253 area. Very likely it will take a breather. But if it clears there, and expect it to hit this number 253.70, there's a one standard deviation going on right there. That clears, expect it to come back into 257. As of now, not plotting anything above 257 for Microsoft, but somehow Apple moves up and Microsoft moves up, then very likely it's going to breach this number and hit 258.70 to 259 area. The downside, this number right here, 250, should act as decent resistance for Microsoft. The 8 on the week, if that breaches, again the 21. Unless 21 breaches, I'm not really plotting anything sub 21 for Microsoft. But if that breaches, very likely it's going to come back into 257. Then the mean reversion is about 253 area, 253. Yeah, that's the idea for Microsoft. And this chart, I think it'll be similar to Apple. And whatever the bounces that I am looking at, on this chart, the daily chart, right now it's acting as this 200 moving day is acting as resistance. that clears right about here. But whatever this is happening, I would still think of it as ephemeral unless I get a crossover here to the upside, right? Unless that happens, or if I get a crossover here on the SMI side of things, at least this crosses over. I'm not looking at these bounces as, I'll be looking at these bounces as ephemeral. And very likely it will cross 8 below 21 if it starts to push below this number today, 248. Very likely it's going to hit this 246. That breaches, very likely we will reassess down here into 242. If Microsoft takes this back to the downside, then you will see 8 below 21 here on the day. Again, I think based on what the RSI is doing here, these bounces will keep happening, especially if it's hitting major support areas like the super trends or the major moving averages, right? So expecting these bounces, but unless either I see a SMI cross to the upside or MACD cross to the upside, these bounces for me will be ephemeral. Right now, I think I'm expecting it to hit this 200 moving average. By the way, the Friday's trade was here, right here. We were expecting, and then we talked about this. Um, we were expecting it to hit this number, breach there, hit this number, breach there, hit this number, and bounce. Right? That was the idea here. And the bounce today, the market opened somewhere about here, and the bounce was supposed to last into this number, 39.98, and it was supposed to push all the way up to 5 on the daily, which very likely it is a technically, it is a hit of that number, by the way, which I think is also reflecting just about here, 4016, right? That clears, will very likely reassess here into 4023. That clears 4031, that clears 4035. As of now, I'm plotting nothing about 4035. I think even if it does here, unless you see this thing here, it is crossing here. So unless this crosses, starts to go into this line, the bottom boundary, the lower boundary, if it starts to get into that number, I'll very likely start to reassess upside beyond the 8 on the day and probably into the 21 on the day, 4055. Keep a close watch on this number as well. This line here, the red line, the 8 on the day, on the week, sorry, 4025, 4027 area will act as pretty decent resistance, right? If that clears somehow, it's gonna go hit this 4031 to 4035. Not really plotting anything above that number as of now. I don't think, I think if it goes hits this number, very likely people will start to short it again. And these bounces are coming from, the trigger RSI here, hitting the bottom and taking a bounce there. Do we have for time for Tesla? No, I think it will be too much. Okay, 2 minutes to open. Let's discuss Tesla in live trading.